In this presentation, we're going to consolidate our two loan accounts. In other words, we have two loan accounts at this point in time. We're going to say that we have consolidated those loans and we need to convert them then into one account, one loan account. Let's zoom into it with Xero. Here we are in our Get Great Guitars dashboard. We're going to go ahead and open up our balance sheet by going to the accounting dropdown and going on down to that balance sheet report. When it opens up, we're going to be duplicating the tab up top by going to that tab up top, right-clicking on it, and simply duplicating that tab. I'm going to change the date up top. We're going to be changing the date to January 2020. So let's go into the January 2020. We're going to update that report so it's up to date so we can work on it. And then I'm going to hold down Control, bring that to 125. I think it was already there, so that looks good. That's where we'd like to be. All right, then we're going to go down to the loans down here. We got these two loans. What we're going to do is consolidate these two loans. We're going to say we had two loans. Now we're going to bring them into one loan amount. So what we need to do then is a journal entry in order to do this typically, because there's no cash that's going to be involved. There's no typical type of account that we would be using within our normal process. If we look at this in terms of our flow chart for QuickBooks Desktop, here's the normal processes. This is a transaction that doesn't happen every day. It doesn't flow into something that we do all the time. Therefore, there's no set form related to it. Also, cash isn't affected. Therefore, we're not going to use, the cash inflow or cash outflow. That means we're typically going to be using a journal entry. So let's go on back to our first tab and think about how we would enter a journal entry. I'm going to hold down Control, bring it back down to 100% so that that Xero doesn't do anything funny as we enter the journal entry. We're going to be going to the reports, the accounting drop down, then to reports, and then we're going to be going down to our accounting information reports. I want to look at the journal report because that's where the journal entry kind of thing is that we can go into making a journal entry. And then we want to add a journal entry. So we're going to add a journal entry right here. We're going to be adding a journal entry. And we're going to have to do this basically with debits and credits. Now, if you're not used to debits and credits, just note that there's two accounts affected. One's going to go up, the other's going to go down. So if you go the wrong way with it, then you could always go back in there and fix it. In other words, if you have the debit and the credit backwards, you could go in there and fix it. So the narration is going to be consolidate loan balances, let's say. I'm going to hold down Control and zoom up a bit so we're back up to here. I'm going to say this is as of, let's say the 31st. We'll do this as of. And then I'm going to bring it back down. I'm going to say we're going to consolidate them into this note payable 3458. So I'm going to say that one's going to go up, and therefore I'm going to credit that one. So note payable 3458. So I'm going to say note, the description. Now I deleted the description. Man. Well, I could just take this and put it down here. And then I could say notes payable 3458. It's going to go up. I'm going to put the credit. That's going to be a credit to make it increase. I put the credit on top, which is kind of unusual. So pardon me if that's a problem for you. And then that's the 22,000. 22,000 on the credit. And then we have the other notes payable. And that's going to be the 5795, which is going to go down with the 22. And notice it kind of populated it for us there. And so there we have that. So again, if you don't know the debits and credits, we know that these are the two accounts that are affected. If it goes the wrong way, then we'll notice that it won't do what we expect, and then we can go back in here and just try the other way, the debit and credits, switch the debits and credits, and see if that should work. So we're going to then say post and see if it does what we would expect it to do. One account going down to 0, the other account being the sum of the two loan balances at this time. So then we're going to go back on over to the balance sheet and check it out. I'm going to update the report. So we're going to have to update so we see the report that is up to date. And then I'm going to hold down Control, scroll in just a bit, and there we have our loan. So now we have the loan balance, one loan on the books at the 72,000. So remember, anytime you have some kind of transaction that's not something that you do on a day-to-day basis, you first want to consider, is there some kind of form that you could be using for it, some kind of normal form? If it's not a daily kind of transaction, there may not be. If it's a cash flow transaction, you might be able to use the cash inflow or outflow form. If none of those apply, then you may have to default over to the journal entry to enter the transaction. So if we were then to go into the note payable then on this 72,000 and consider what happened with it, the transaction, we're going to have a journal report. As soon as this thing pulls up, there it is, the manual journal. There it is, the manual journal, bringing it up to that 22,000. The other account has gone away because it now has a zero balance within it.